Thanks for tuning in to Talking Point. I'm your host, Niraj Shah. The talking point today is whether smart money is bullish at the current valuations, or is it bearish? And even if smart money is bullish, is it tactically feeling jittery? Well, a brain who I have highest regards for, Sridhar Sivaram joins in right now to talk about his thoughts on all that I just said. Sridhar, good having you. Thanks much for joining in. Hope all is safe.
Yeah, thanks for inviting me.
Sridhar, so that's the sense. I mean, the common refrain that I hear for the last 15 days in the markets is that long term may be great, but we've gained a lot too fast, too soon, and maybe it's time to be cautious. There are brokerage notes from Goldman Sachs, from CLSA, all of which are saying tactically be careful because we might be near a correction. What's your sense, Sridhar? How do you look at the markets at the current level?
Yeah, so there's some truth in what is being said. We are up almost 90% from the lows of March 23rd with hardly any correction. And you look at any bull markets, even 03 to 07, there were, number of corrections of over 20-25%. So I wouldn't be very worried that if there is a correction at all, there is a possibility that we see a correction. So it's just a question of what happens to the market post the correction and how it moves from there. So it's fine. I mean, markets always have correction. There's never one-way traffic is never good. So I think it's very healthy if there is a correction, and hope it comes and we move forward from there in the bullish way as we are seeing right now.
Yeah, so one can never hope for an ideal correction. Let's put it that way. But I'm just trying to get a sense from you. You reckon 5-10% could be in order?
Yeah, I mean, it's very difficult to pinpoint a number, but I would say normal bull market corrections you do see north of 10%. So I wouldn't be even worried if the correction is more than 10%. In fact, that would be a healthy correction. So I don't see any issues. Markets have always seen correction. We may see a correction, but I won't be so worried about thinking that there is a correction, so I have to change my portfolio stance.
Yeah, I mean, lest anybody thought that this is going to be a trading conversation, it's not. It's just me trying to get into the tactical side of thinking of Sridhar Sivaram. Now to the investment style. Sridhar, both the global and the local picture. Can I start off with the global picture first?
Sure.
And just a thought. I mean, yesterday, a lot of people thought that Janet Yellen would speak about bringing back or upping the corporate taxation. If anything, she said that they are not in favor of doing it now when the when the economy is fragile, etc. Joe Biden is on record saying that he wants to dole out a large stimulus, etc., etc. How is the global piece looking like with the virus cases moving up, lockdowns still in place in a number of major economies, but this stimulus being there and the rates being where they are?
So I think first we have to, accept that this is a massive liquidity-led rally. How much ever we may want to, say that recovery is good, earnings are going to be great. When you dissect everything, things don't fall into place as far as fundamentals are concerned. So as you said, the virus numbers still going up, especially in the developed markets. Lockdowns haven't gone. In fact, travel restrictions have only gone up. And we ourselves are having enough travel restrictions on people who come back from Europe and UK. So I think these all do hamper economic growth, not only for India, even for global economic growth. But having said that, the fact that liquidity is going to continue, the stimuluses are going to continue, we'll see that this money flows into various asset classes. We are seeing other asset classes like, say, commodities and say even what we are seeing with Bitcoins. So this sort of frenzied activity will be we will continue to see at least for the first 6 months of this year. We'll have to see how the stimulus plays out and how governments behave after that. As long as this continues, I don't see any issues to emerging markets in general, because that's where a lot of the money is flowing.
I use the term Bitcoin. I'll ask about it at the fag end of the interview. It'll be interesting to know your thoughts. But just a small follow-up there. Would you reckon, Sridhar, that all the noises that we've heard thus far about the stimulus, etc., lead one to believe that this is going to stay for the time being? So unless there are telltale signs of that reversing, Should the overarching view be bullish in general?
Yeah, I would agree with that. That as long as there is a sense that this liquidity is going to continue, the stimulus is going to continue, and inflation is not becoming an issue globally, one would have to take a view that this the bull market globally that we are seeing currently will continue, and it's better to stay invested. I mean, you could see some corrections as we move forward for various reasons, but the broad framework has to be bullish right now.
Hmm. Sridhar, the other bit is how India is faring or has fared thus far. I know there were a lot of calls, and I honestly I don't quite exactly remember what your thought process was back then. So please give us some insight there too. But India kind of approached this differently. That we didn't go out doling out massive truckloads of stimulus, and maybe it's worked in our favor that we didn't overheat or over leverage our balance sheet. We've come out okay thus far with RBI doing the heavy lifting. How are we placed right now with the fiscal situation that we have currently, but also the fact that the numbers on the virus front aren't looking particularly bad when it comes to India, and the economic activity largely seems to be on the mend. If I hear whatever whatever little corporate India has had to say thus far in the earnings season.
Yeah, so going back to our views in March, April, we were very bearish, but our overarching view was that there is only one market as far as global markets are concerned, which is the U.S. markets. So our view was that we are happy to miss the first 10% of the rally, but once that is done, you get in, and don't worry about what is happening to India or the virus or anything else. The markets going to be driven by liquidity and by the US markets. And that was a broad view. And I think we followed that, and we missed the first 10-15%, but we jumped in after that. As far as India's stimulus is concerned, we were always supportive of this view that the government had, that as an emerging market, we cannot afford to have the same amount of stimulus that many other global markets were giving out or doling out at that time. I know there were a lot of critics on the government on the way the stimulus was given out. Now, as we stand after, say, 9 months, a lot of the economists who were criticizing earlier are coming back in line, saying that possibly what India did was right, and fiscal prudence to some extent was great. And we still have a lot of bullets to fire, which I guess we will see some of it coming in the budget, that we may have a higher fiscal deficit target. We may actually guide for a higher fiscal deficit for the next few years. But I think these are things that the rating agencies will be quite happy to, accept. And that sort of gives confidence on the, fiscal prudence of the government. So I'm completely supportive of what the government has done. We'll have to wait and see what happens in a few days' time as far as the budget is concerned.
You expect the budget to be more than a statement of accounts this time around, simply because of the times that we are in.
Well, even in the past, we've seen that the budget has been a slightly more than statement of accounts. There's been a lot of, other schemes which are not related to the budget being announced, used as a platform to, position the reform mindset of the government. I think that may continue. But having said that, the overarching fact and the number which most people will be looking at is what is the fiscal deficit for the year that has gone by, or what is going, which is 2021, and what is the fiscal deficit that the government is budgeting for the next year, and how realistic are those numbers. I think that's what people are going to look at. I think even if the fiscal deficit is, say, in and around 5% for the next year, I think it's going to be an acceptable number given the conditions that we are in. And if there is a glide path to bring it down over the next 5 years, which should be acceptable, I think it will be prudent for the government to keep it slightly loose as far as the fiscal deficit is concerned, given that the economy is still recovering. As you mentioned in the beginning, there's still a lot of restrictions, and economic growth is not to its fullest as of now. So those are the things that I'm going to look at as far as the budget is concerned. But broadly, from whatever I've read in the press, I think that's broadly how the government is also looking at. We'll have to see if some new cesses come, which may be slightly negative.
Hmm. Sridhar, one of your ex-colleagues, and it goes back a long way, but I was speaking to Rhythm a month and a half ago or thereabouts, and his view was that the color of money that is coming in is not necessarily only EM dedicated, but a lot of India dedicated money. What's your sense on the liquidity front with the kind of money that's coming to India? I mean, we've had unprecedented flows of sorts in November and December, even though it's trickling down a little bit right now. One, do you get a sense, because you guys have a very large insight into how money is coming in, because
Yeah.
you get a lot of money too. So what's the nature of the money? Do you reckon that that is likely to continue by virtue of the insights that you have? How do you dissect that piece?
So just to put things in perspective for emerging markets, the last decade was a lost decade for emerging markets. The returns of emerging markets for the last 10 years was almost zero. India itself in dollar terms was about 1.5%, 2%. So the broad view or the sense is that this is going to be the decade for emerging markets. Whether it plays out or not, we'll know after 10 years. But that's the broad view that you've had a decade which was completely lost for emerging markets for various reasons. A lot of that have now looks like many of the issues of the emerging markets have been resolved. Many countries have gone into reforms. Even during the pandemic, we've seen India having started on multiple reform measures. We've seen similar from whatever I read in Brazil, in Turkey, in Indonesia. So many other countries have also followed this. That basically results in a stronger economic growth over the next 4 or 5 years. So if that is a broad view, that there is a general feel that emerging markets will do well this year. The other, of course, is that emerging markets do have a large component of commodity-related companies, and when commodities do well, emerging markets tend to do well. So there's another feel or the broad view that commodities are entering into a super cycle because most countries would want to stimulate economies by spending a lot. A lot of those spends go into infrastructure and many other sort of spendings, which result in demand for commodities going up. So that's a broad framework, I would say. And yes, money is coming in, but I'm still not very sure if India dedicated money is becoming bigger. That's at least the data is not suggesting that dedicated India money is actually growing, maybe marginally here and there. But what we are seeing is ETFs of emerging markets seeing huge flows, large emerging market funds seeing flows, and a lot of the developed market funds are allocating larger amounts to emerging markets. As a result, a larger amount to India.
Okay. So viewers, that's the nuts and bolts, right? That there might be a correction. Don't get unfazed by it, or don't get fazed by it. Really, it's all okay. Uh, you should stay invested, so to say, and a lot will depend on the budget, and a higher fiscal deficit might be acceptable as well. So within this framework, Sridhar, uh, how do you go out thinking of investing fresh money? Because there's been a very stark divide over the last decade between value versus growth and buying expensive versus buying reasonable. But it's
Yeah.
becoming even more stark right now because the rally started to broaden a little bit. Um, where are you on this argument, and why when it comes to the Indian context?
Yeah, so I've been a growth investor for decades now, but for the first time in the last 2 3 months, I have actually started seeing that there is a case for value as we speak right now. And specifically in the last 3 months, we have as a house increased our position as far as PSUs are concerned in general, both on the financial side and on the non-financial side. And one of the reasons for this is that, as you mentioned, the valuation gap has significantly gone up. The entire PSU basket, non-financial market cap is around 8 or 8.5 lakh crores. Just Reliance itself is higher than that. And the entire financial PSU basket is some 3.5 lakh crores, or maybe around 4.5 lakh crores. And we know HDFC Bank is multiple times of that. So the numbers itself look staggering right now. Along with that, you need a trigger. I mean, if there is no trigger, then this becomes a value trap. We think that one of the trigger could be the privatization, which the government is very keen on. So even if we see one of the privatization as far as BPCL or Container Corporation, Shipping Corporation, and there are many others which are lined up, if we see even one of them getting privatized, we would see the entire basket getting re-rated. So that's one of the reasons, and we think that we're very close to that event, that the government is serious and they're pushed to the wall, and they do need resources, and this is possibly the best way of getting value out of some of these companies. And the government need not be in all the businesses, as many experts have highlighted these details. As far as the financial part of PSU the concern, which is the PSU banks, we think that the large part of the NPA accretion is behind us. Maybe a small part comes maybe in the quarter now or the next quarter, which is related to the pandemic related NPAs. But broadly, the market has priced in, even though RBI has given a very aggressive number of an NPA number going up by 300 to 400 basis points. Speaking to many of these banks, the indications are that the numbers will be much lower than that. The other part, as far as the PSU banks is concerned, that most of them have aggressively provided over the last 4 or 5 years, and they hardly have any new troubled large accounts left. In fact, on the contrary, if we get some resolution for, say, DHFL or for Bhushan, there could be large write-backs. I mean, because these are 100% provided accounts. And in many of the cases, what we also found is that the market caps are lower than the pre-provision profit. I mean, just to put things in perspective, for a private sector bank, the market cap is about 10 to 15 times pre-provision profit. Many of the PSUs are trading below, the market caps are below their pre-provision profit. So I think there is a case here. Only time will tell whether this was a value trap or this was a good investment. You need patience for many of these. And we've taken a call as far as value is concerned.
You would reckon that will get proven. The proof of the pudding would be if the trigger falls into place, which seems to be very close from the sign of things.
I would think so, that you need a trigger for this, and maybe the trigger is around the corner.
Okay. The other thing is, okay, let me first dwell upon a couple of other points that you mentioned. Commodity super cycle. I heard you use this term. Now, back in May or June, Sridhar had written a piece about how the valuation seems so much in favor for some of the Indian metal names, for example. And some of these have now moved back to what the mean valuations were. If indeed we are in a commodity, we are in the throes of a commodity super cycle, in the midst of a commodity super cycle in the making or in the midst of it, do you reckon that there is a longer run for some of the well-managed integrated metal companies in India?
Yeah, so if you go back, say 6 months also, and if I even 3 months back, many of these commodity companies were trading at 0.5, 0.3, 0.4 book. So there was a large, the risk reward was in your favor. Typically at those valuations, you have to just sit and have some patience. Fortunately, this time around, you didn't need patience because they've rallied so sharply in just 3 to 4 months. But having said that, even the commodity prices have rallied. If we put those commodity prices in the earnings, what we see is that earnings growth could be multifold. But as we know that generally in a commodity bull cycles, the companies don't rally as much as their earnings, because that's how the whole cycle is. Basically, there's a bull and bear cycle as far as commodities are concerned, and they don't trade at the same, or the appreciation is not necessarily in line with the earnings growth. Having said that, we do see that this earnings growth will continue for some more time, maybe 12 months, maybe 18 months, and we have to keep a close watch on that. And many of these companies have delevered. Their balance sheets look far better than what it was before. The question is that when do they start putting new capex, anticipating more demand? Maybe that's the time to relook at some of these companies.
Yeah, that's interesting, right? Just when corporate data starts to take action, it's a bit of a cue for equity investors. Just one quick follow-up there, Sridhar. Do the Chinese lockdowns, re-emergence there, or signs around how Chinese inflation is behaving and coming off a little bit, do these not worry you when it comes to investing in say, global metal company?
No, it does. One of the reasons for the commodity prices to actually go up is also there are still supply disruptions. So it isn't as if supply is perfect. We know, and it's well documented, that even there are shipping related disruptions. Container availability is an issue. So there are many disruptions. Not every country is perfect right now. And because of all these issues, we are seeing supply disruptions, which is also resulting in commodity prices being higher. The view is that as the supply disruptions sort of ebb and things come back to normal, there will be more demand, because one, there is a pent up demand. We know from our own Indian situation that autos today, there is a waiting list, and you really can't go off the shelf and buy a car. So as a result, there will be some pent up demand. So it is a close. You have to monitor these very carefully. It looks like this cycle could continue for some time, and we'll have to monitor these things very carefully, how the second wave or whatever comes up.
Um, Last couple of questions, Sridhar. One is on information technology. Now, again, conversations with the IT companies seem to suggest yesterday with LTI, or a few days ago with HCL Tech or Wipro, etc., seem to suggest that order or deal wins are not a problem. Conversion rates are very high, and the pipeline is looking very strong. Valuations have inched up selectively for a bunch of these. How sanguine are you about the prospects of Indian IT? Do you reckon that even if FY22 could be well classified as a growth year because of pent up demand, base effect, etc., are you guys penciling in FY23 as well to be a strong growth year, or is it difficult to say? And therefore, what's the call on IT?
So this is my personal view that it's difficult to call IT so far down the line, and to expect that they will do strong double-digit growth. I mean, let's accept it. The last time IT actually did strong double-digit was back in 2010 or 2011, when TCS and Infosys did dollar revenue growth closer to 20%. So we've got used to the single digit dollar revenue growth for many years now. And we are now seeing there's a chance for a double digit. Is the double digit going to be as strong as it was in 2010 11? I don't think so. But is the market pricing some of it? Yes. So I think there's a chance for disappointment. But as we speak right now, since they are doing well and the other opportunities and other options don't look that attractive, these stocks are doing well. So I would be cautious. I think many of the domestic opportunities to me look far better. Not
Okay,
all
but
of them. I'm just saying that some IT companies do look very strong because of the digital percentage revenues that they have. But as a broad view, that's the broad view I have.
but you don't buy the argument that average valuation multiples for Indian IT should move up from where they have been. I mean, traditionally there was this lame argument put out a number of times that why can't IT be the new FMCG? You don't buy that argument.
I don't buy that argument simply because there's so much of disruption that's happening in technology. And tell me if one Indian company has created an IP which stands out globally in the last 10 years. So yes, we talk about digital, we talk about some fancy, language as far as IT is concerned. But at the end of the day, we know at what value chain they are. Look at Chinese companies, look at global tech companies, look at the IP, look at the disruptions that have been created. Why is it that we haven't created a global tech giant from India? Maybe, starting of the last decade, there were a few Indian tech companies who were in the top 20 list. There were hardly any Chinese companies there. I mean, today you have two tech companies. I mean, obviously they're not just tech; they do a lot other stuff. But say Alibaba, Tencent are what 500, $600 billion companies. We haven't created any. So I think as technology gets more and more disruptive, I'm not very sure if Indian companies have protected themselves and have disrupted themselves to protect themselves from the next disruption which can happen to them.
Got it. Final question, Sridhar, and that is on this very topic. The slew of IPOs slated to come out in 2021, right? Nazara has filed, but we probably have a first glimpse of slightly differentiated tech-enabled businesses which are largely tech from the core getting listed. Is that exciting enough for you? Do you reckon that it's creating a new sector of sorts possible?
Yeah, so if we see, there are many technology companies who are very different, who have IP, who have something which they have done differently, but most of them are in the private markets right now, and private equity is sitting on a lot of them. We do see some of them come out, and I think that will differentiate between men's versus boys, because that's what you want to invest in. That's where the growth is. So I think it'll be exciting time. We'll have to see how they get valued by the market. But those are companies we'll be very closely watching.
Okay, so the grand finale, Sridhar, tell us, have you made a provision for Bitcoin in your portfolios, personal or client?
So honestly, I did want to invest in Bitcoin, and I found it very difficult to actually invest. I mean, the regulatory complexities were too large. This is I'm saying about 3-4 months back. My broad view was that given the amount of printing that we are seeing globally, the value of dollar continues to erode. And the question is, value of dollar will erode against what? Because all other countries are also printing. So the very obvious answer is precious metals, which is gold, silver, or Bitcoin. It was easier for me to invest in gold, silver, which I'm very much invested. Gold did very well last year. In fact, silver did even better. And not compared to Bitcoin, they didn't do as well. But on an absolute, 25% returns, and silver some 40% return, they are very good. I think this will continue. I think central banks will continue to buy gold and silver and Bitcoin. I mean, many millennial investors prefer Bitcoin. I think the investing complexity as far as sitting in India and doing a Bitcoin is a bit more complicated. So I've stayed away. But I am bullish on Bitcoin.
Okay, fair call. Sridhar, appreciate you giving us this thought and all your thoughts for the last 25 minutes. Thank you so much for taking the time out and stay safe.
Thanks for inviting me.
The pleasure was ours.
Yeah, thank you.
And viewers, thanks for tuning in to this edition of the Talking Points.